Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate expert Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
What are the craziest things you've heard so far in the past week?
Craziest things I've heard so far this past week. It is almost an hourly event in this country where you read some piece of media release, something released to the media by organized real estate, the real estate companies, which are only franchising companies. They are not real estate companies. Let's debunk that myth once and for all. Governments, we just had the Wynne government make comments here in Ontario about Home Capital Group, self-serving interests of people. You know, the poor Canadian homeowner, and I really mean this in a sincere manner, Jim. It's no wonder they make decisions that they probably wouldn't make if they were simply told the truth. They would make decisions that would save them tens or hundreds of thousands of dollars over their lifetime if they just didn't listen to these people. But because until we came live, we're really the only alternative source of information in this country as of today. It's really a disappointing fact to realize. So the most crazy news is that people who had money in Home Capital Group had their savings there, which are backed by the CDIC, the government, insurance. In other words, up to $100,000, you have no risk of losing because the government has insured it. The exact same insurance that you get with CIBC, Royal Bank, Toronto Dominion, any major Canadian bank is the exact same insurance you have when you put your deposit with these alternative lenders. So people put their money there because they can get maybe an extra 1.5%, maybe even 2% interest versus if they had put their money with a savings account at a traditional Canadian Big Six bank. You know, that is a tremendous return, knowing that you're going to get an extra $1,000 to $1,600 a year on a $100,000 investment. That's a lot of money for people. But because the way that the conversation has been about this topic, there was a run on HTC deposit holders to get their money out of HTC, when in fact, unless they had more than $100,000 there was no risk anyway. What they did is they listened to outside sources who have their own particular self-serving interests involved in this Home Capital Group discussion, and they leave interest on the table, and they go to what they perceive to be the safeness of the Canadian banks. So what's the most craziest thing? The Canadian banks use the Teranet National Bank House Price Index forward sortation area breakdown to give their shareholders their loan-to-value ratios, updated each and every quarter. Home Capital Group does the exact same thing. It is just ludicrous that anyone would take their money, unless they're over $100,000, from one CDIC-insured institution in Canada to another and willingly forego $1,000 or more of interest in a year.
So far, it looks like Home Capital has used up about 2/3 of the $2 billion line of credit they received. Should people be concerned about that?
You know, Jim, I'm going to have to go back and listen to last week's show because I can't remember if I said on the show that what I would expect to happen with HOOPPs, the pension fund, being the signatory for that $2 billion loan, where they quickly made a 15% annual rate of return on that $2.2 billion investment. If I didn't say it on the show, people can go back to my Twitter feed and they can see where I tweeted that out on May the 1st. But what I said at that time is that what these places are going to do is, if a pension plan is investing in the HGC, Home Capital Group, platform, it's because that pension plan says, worst case scenario, boys or girls, we're just simply going to take over your book of mortgages and we'll administer it ourselves. Because we know the rate of return on those mortgages is so secure and so low risk that the returns that we're getting are just phenomenal. So not only are they now going to probably step forward, because we heard today now that their board of directors magically is going to have one of those HOOPP pension plan managers on it. Just exactly what I mentioned to everybody last week. When you're looking at these sort of situations, yes, do I think that there was some fraud going on from a select group of mortgage brokers who inflated the incomes of their clients in order to secure mortgages with Home Capital Group? Yes. But you want to know something, Jim? The exact same thing happens with every single big Canadian bank in Canada. It's gone on for 40 years. Whether it is a little tiny fudging of the numbers, whether it's the fact that they don't include enough for electricity and heating, gas in their qualification numbers, whether it's they underestimate the taxes when they give the approval. There's lots of little ways that for decades has gone on to try to skirt the rules. This skirting goes on everywhere. It's never going to be eradicated. And in generally speaking, as we know by the foreclosure rate in Canada being leading the world in that category where we don't foreclose on our homes, it really has no impact. People find the extra $20, $30 a month that they have to come up with to their house. Or if they got a raise of 1% last year, that'll make up for the difference that they have to pay. It is just simply a crazy situation that was inevitable. The moment you heard a pension fund was going to invest, these guys are super sharp. These guys are not guessers. These guys are the top leading, as far as I'm concerned, financial minds in Canada when it comes to investing. They're not going to make this decision unless they know that they're protected.
We'll have more with Ross Kay right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, are listings increasing in the lower mainland of Vancouver and the greater Toronto area?
Yeah, no, I know what you're talking about here. So this is more propaganda coming from the real estate boards. Yes, listeners, your listings always increase in the spring. What happens with spring is plans that people made last fall and over the winter to move this year, if they could make that move, start to come into effect. They start to take the actions that are common that would allow them to make that move. One of those functions, or one of the things that you got to do, is you've got to sell your existing home. Now, there is a unique difference between every single regional market in Canada at any given moment in time and any other unique regional market. because it depends on where the trading cycle is in that individual market, what listing counts mean. In other words, if anyone tells any of your listeners that listing counts mean anything specifically, they are wrong. Your commentary has to be structured to what the market is doing at that particular moment in time in that marketplace, in comparing it with the ongoing trading cycle that is taking place. So what I mean by that is this: in British Columbia, say in Vancouver or Kelowna, where listings are increasing, your listings are increasing as a natural consequence of your trading cycle slowing down. In other words, your market is correcting in Vancouver. In most of British Columbia, if it's not now, it will be in the next couple of weeks. So houses were not selling at the same rate. So in other words, people who are thinking about moving are now listing their properties for sale, and they're not selling as quickly. It is not an indicator of supply and demand, which real estate or organized real estate, CMHC, the banks, economists, housing analysts all pretend it to be. That they are factually wrong. Your listing counts are simply a forward predictor of possible future market conditions. In other words, what I mean by that is this: if there are 100 people who have their houses for sale today, and they haven't already bought another home, and their house sells, then you can forecast a future 100 sales will take place, because those people are homeless the moment their home sells, which is the case in British Columbia right now. Now let's flip to the GTA, where the real estate boards are reporting 9 days between when a house is listed and when it is sold. So the houses that are actually selling, those houses that actually sell, in other words, we won't talk about the other 60 to 70% that didn't sell last month, but the ones that actually do sell also happen to be the best houses that are for sale this moment in time. So you need to understand that, and you need to how that's applicable to your unique situation if you're thinking about buying, by the way. But these listing counts in the GTA, what happens when you have a 9 days between list and sale, which is what the Toronto Real Estate Board calculated for those homes that sold in the month of April, it means that people are buying their next house before their own house is sold. So this is the same thing that happened in Calgary back in 2014 when the Calgary market was misrepresented to all of Alberta, because it was what we call, my firm, called oversold. People were purchasing their next house before their existing house was sold because they were so confident in the market. Same thing's going on in Toronto right now. Same thing is going on in Toronto. It's going to be the same thing that the people in Calgary find out. You can get caught. You can get caught owning two houses. When you're caught owning two houses, you have to drop the price to get it sold. So that mortgage, that $400,000 mortgage you were counting on, all of a sudden becomes $440,000. There's the problem. That's why timing the market is so important. That's why one of our key metrics, which allows people to time the market, is so important. It can reduce your mortgage by anywhere between $20,000 and up to $120,000 based on a simple market swing in each unique market here in Canada. So your listing counts in Vancouver, in British Columbia, that are going up are going up, meaning people want to move, but they haven't sold their homes yet. In Toronto, it means people have to sell because they already have purchased their second home. When a market rolls over, when a market turns, when the trading cycle changes from an upward swing to a downward, the downward portion of the curve, that's where you get caught. That's where timing the market is so important. That's where you can save, tens or even hundreds of thousands of dollars over the course of a mortgage, as long as you know what it's meaning. Don't listen to a real estate board. Don't listen to an economist. Don't listen to a housing analyst. Whatever you do, don't listen to some realtor who thinks they know what they're talking about. because I can tell you they don't. They don't have any training to know any better. What you're reading with these listing counts are simply dependent upon how that market is. You're looking at the local unique market, how it's functioning.
Is Toronto close to peaking out?
Is Toronto close to peaking out? So our members have an ongoing update for all local markets, and so when I talk here, I'm talking about publicly accessible information that our firm releases. So that you've got to remember, when I'm talking here on the show, that information really is still stale dated by 3 months, because we would never go to the public with a 3-month lead time, where we want to make sure that those who hear what we're saying misinterpret with what we're saying. So after 3 months pass, in terms of when a market swings, a market never reverts back to its previous path. So although our members have their information well in advance, 3 months, and they can make their decisions and protect themselves, listeners here have to just take what I say with a grain of salt, because it could take months before you see what I'm talking about here appearing. Your listeners from last year in Vancouver know that to be the case. They can go back and listen to your archive.
Yes, Ross, you said August would be the breaking point last year, and exactly it was.
Right. So now you also have your market rolling over in Vancouver. So that was something, and again, your listeners could look back, and I forecasted back in January of this year on the show, Jim. What that still means is that we're still 3 to 6 months ahead with the metrics that we measure to what's going to happen to your market. Regardless of that, what I'm saying is the Toronto market swinging? The Toronto market is dependent upon the province of Ontario's real estate market. So last year at this time, we recorded negative trends in the Ontario market. So that is a year ago, folks, a year ago. Anybody who has a dashboard, they should log back in and check those old postings. But that turn that we noticed is now starting to result, and you're seeing a little bit about that in the news, with Toronto Real Estate Board saying that their sales were down in April and blaming it on the Easter Bunny. Well, what the person from the Toronto Real Estate Board, their analysis doesn't understand, because he's never sold real estate, and because he's never worked in the MLS system, and he doesn't know how the reporting system, he doesn't know how the habits of the Realtor members work, the Easter Bunny has no bearing on April sales. Doesn't matter when the Easter Bunny comes, it has no bearing on the sales in April. What has a bearing is reporting days, which is what we count. So we know that there is a negative turn in the Toronto Real Estate Board. What your listeners can easily do to verify these sort of things themselves is, if you go ahead and you pull up the sale prices from last month for detached homes in the 905-416, semi-detached townhouses, and condos, you'll see that the April prices were actually lower than the March prices. That never happened. In the Toronto market, even their any seasonality at all that happens in that marketplace, doesn't work that way. Now, I know on the show I've told everybody, never believe seasonally adjusted stats, because they don't have a trading cycle component of their methodology, so you can't trust them. That's true. But the sales decline and the fact that March and April's prices were lower than March, that is a sure telltale sign in the Toronto market. You need to know which part of Toronto you're talking about, what type of house that you're interested in buying or selling or owning. All of those things are unique, and everybody has to understand that when I talk here in the show. These are generalities for the local markets. Specific knowledge is what you need to use when you are making any decision.
Everybody's different, and you have to adjust for all those differences. We'll have more with Ross K right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, one of my other real estate-ish kind of reporters, told me about a story he heard in Toronto recently that somebody decided to put their house up for auction. One person showed up and they didn't even bid the asking price. Does that tell you something?
Yeah, it tells me it's just another incompetent realtor. To be quite frank with you, Jim, and I don't like to come on the show and sound like I'm negative all the time, because I'm not a negative person. I mean, my volunteer efforts are to coach kids. You can't be a negative person and coach kids, certainly not for 20 years, and have them still want you to coach them the next year. So I'm not negative by nature, but I am negative about the real estate industry and the profession as it exists today. That was simply an incompetent realtor. They told that owner a fairy tale in order to get that owner to list the property. This is a common practice in the industry, which is why when you need to look at how real estate sales representatives and brokerages work over a 40-year window. You can't look the last 5 years or even the last 10 years. You got to look over the whole window. Canadians need to understand, for every 100 listings that have been taken by Canadian real estate sales representatives and brokerages over the last 40 years, only 30% of those listings sell. The real estate agents were wrong. The advice they gave was wrong. Only 30% sold. Now, this isn't restricted to young newbies, inexperienced agents who've only been there for 4 or 5 or 10 years, agents who think they know more than they do because they've never studied the market. This is experienced agents who have sold thousands of homes. In my hometown here in Burlington, there are a couple agents now who have surpassed my sales volume and not my family's, but my own sales volume now that I've left the business. And what these people claim, these agents are saying, is simple nonsense. It's sales talk. And they only, over the long term, maybe they get to 40% if they're really good. But generally, if they hit 40% of their inventory selling before it expires, that's got more to do with them adjusting the price downward from what they listed it at. So people need to understand, when you hear these stories about a house going to auction, we're going to auction the property. First of all, in the province of Ontario, a real estate agent isn't licensed to auction the property, so the regulator should have charged that person. My firm can auction properties if we so desire, because we're not registrants, but registrants cannot auction. Certainly something a lawyer should be looking at for that particular person. But whether or not they had any offers is irrelevant. What I would say is that a market peaks and a market rolls over. If you have the right intelligence going on about that marketplace and the insights, like how we measure a market, you still have months and months to make before you lose any money. What has gone on with these folks, they simply got bad advice, another incompetent realtor doing another incompetent job.
Does poor quality tap water cause real estate prices in an area to drop?
What a timely question. What a timely question. Okay, here's the answer to that one. If you live in a floodplain and your house floods, as we have see as a problem across this country right now, when you purchase the property, someone should have informed you that not only is it in a floodplain, or the services in the community you're buying in may not be up to snuff in terms of having any irregular rainfall, but also that there will be probable contamination to many of the groundwater resources that people use to get their drinking water. Now, you're specifically mentioned tap water. Well, if there is the famous case here in Ontario that I'm not even going to talk about by name, where a whole community suffered tragedies because their municipal drinking water was not monitored properly. What I can tell people is now years and years have gone by, those homes still have not recovered their value. One of the key things that you should always be investigating on any property that you're going to purchase is the potential for water infiltration into your home or into the municipal or even your own personal, if you've got a drilled well, water source. Certainly anyone who lives on a lake where your water, your municipal water is drawn from that lake, you shouldn't be confused that runoff may exceed what your water filtration plant is able to handle. Now, I know, most plants, this really is not an issue, but if your community grows and there has not been enough infrastructure in build up as your community has grown and your water system, municipal water system, becomes increasingly more tasked to a point where it's maybe within its margin of error of functional operation, then these issues can come into play. And there's no quick fix for that other than an increase in property taxes. Property taxes are a key decision when you're purchasing a home, one that no one discusses with home buyers. It's something that we insist is discussed in our home buying programs because we know how important it is, not only today, but over the next 10 years of ownership.
Of course, the town you didn't mention was Walkerton. That was back in 2000 when they had that disaster.
That's right, and I have relatives right next door in the town of Chesley.
Oh, it must have been awful.
And I know that they had friends, and we're talking a tragedy here. But I will also tell listeners. I mean, my experience in this area, again, I'm lucky enough to have lived in small communities over when I was growing up, and I know that the things that went on with Walkerton didn't just go on there. I know that those things were those type of things were common in a lot of smaller municipalities where friendships and we can trust Joe and, we did it this way for years and years, don't worry about it, come into play. What that specific instance woke me up to the reality of when it happened was the risk that we place our citizens at when we allow old practices continue simply because we're comfortable with them. No, there is a point in time where we need to step back and reevaluate and make sure that drinking water in this country is the safest drinking water in the world.
Ross, thank you so much for your time.
Thanks a lot, Jim.
My guest has been Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Any questions for the show or for our guests can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.